What's up? What's up? What's up, good people? We're back. We're back. We're back. I hope everybody had a brilliant London session. I hope everybody has made some money. I just look back over my trades from London, and I'm not too disappointed in them. As a matter of fact, I'm quite satisfied with what occurred. Sorry, with what occurred in London. Uh, yeah. So I'm looking forward to this backtesting session. As I mentioned yesterday, uh, we just we here to we here to go in and get better as traders. That's what we're here to do. We're here to get better. Uh, we're here to really just form a community of people who wants to get better, who wants to work to become full-time traders. Okay, that's what we're here for. That's what we're doing. So I'm gonna continue where I stopped yesterday, the 4th of May, if I'm correct. Uh, and we're back this in Euro USD. As I mentioned yesterday, we're still going on with Euro USD. Okay, that's what we're doing today. So let's take a look at Euro USD. So we're just doing London session just because we only trade in London session. So we are plain and simply just doing London session. Okay, let's take a look at what's going on here. Let's take a look at what's going on. So we can see this is 3 o'clock. So if we go down to the 1H, this should then be about 6 o'clock. Let's jump into 7 o'clock. And I usually start to look at the charts at about 8ish. I know I jump on live at about 8:30. Uh, so I'm gonna start, let's say 8. Okay, perfect. So let's just run through what we see on the chart right here. So you can see price was making higher highs, higher lows. We then pulled back for a potential higher low. We failed to make a new high, and this was at about 9 o'clock on the 3rd. We then went down, taking out that specific area, the potential lower high, but then taking out the actual higher low. Sorry, not lower high, higher low. Then we took out the actual higher low. Okay, now I can see price has been trickling down, but however, price is in a downtrend. Let's not get that wrong. What we can see is that price has an area in the market where price failed to break below for quite some time. So that's an area where I'll be watching. And then this is also an area where I'll be watching. What I would like to say though is if price can pull back and then go downwards, that will be brilliant too. So let's keep an eye. Let's see. 15 minutes. Okay, perfect. That is really good. This is actually quite decent. So I can see we didn't break this, but I can see that momentum starting to come to the downside. Okay, there's no momentum in that candle. What do I mean by that? That is a very, very tiny candle, okay? Just in terms of the body, you can see there's wicks on either end. You don't want to be entering a market after that. That's something that we can possibly work with. I just don't like these wicks. It's like there's no momentum coming off from breaking this key level in the market. So let's see if momentum can. Oh, mate. Would you look at that? So I guess based on the strategy, if this is bearish, you expect in the next candle to be bearish, right? So what I'm simply gonna do is move this here, and then we're dropping down to the 1 minute. What we're gonna do now on the 1 minute is We're gonna wait for price to pull back first of all. Come on, give me a pullback. Okay, there we go. We're getting a pullback now. Let's see, do we go further back? Yes, we do. Okay, now you can start to place something like that. Now, on a normal basis, I would not take this trade after. So this is a momentum candle, right, on the 15-minute. But did you see how far away from the key level it pushed, though? It pushed tremendously far from the key level. So this is a very tough one. Let me see what's the time here. 9:20. Okay, it's not too bad. So your stop loss is above. So this is the 15-minute creating a wick. So that's why stop loss is above there. For now, let me see. Okay, price is going down. Price is going down. Price has triggered us in. So now you kind of assuming, not assuming, but based off from historical data, you what you thinking is when price triggers you in here. I was in at 195. When price triggers you in, what the thought process that you should then think is that this 15-minute candle is now going to turn bearish and continue bearish with momentum. So at this current moment, let me see, did we achieve break even already? Let me see. Yes, okay. So we at break even right now. This is debatable whether we got taken out or not. Okay, that's a 1 to 2, so 25% is taken off this trade right now. I think that's break even. I think that is definitely break even. Okay, that's break even. So as you can see, we got momentum coming into the market. When the momentum stepped in, when you got this first candle, you're moving your stop immediately to half. From there, what you're then doing now is you waiting for this to then happen. Once that happens, you're moving your stop loss to break even. This is very debatable as to whether, as I mentioned while we were backtesting this specific trade, as to whether we are actually going to get a break even or not. It depends on spread. It depends on multiple things. So I don't think any spread on Euro USD is more than like 1 pip, and I can see that there's quite a decent space in between. So let's say it's 190. I don't think half a pip that could be, but on FTMO, you know that you have a spread of about 3 points or something like that, 3-4 points max. So yeah, let me write this down before I screenshot it. So this is the third trade. All right. So this is the third trade. At a 1 to 2, we would have gotten a win. At a 1 to 3, we would have gotten break even. 1 to 3 would have gotten a 25% with a break even. 1 to 4 would have been break even, 25% and break even. %, break even, 25% break even, and then okay, so from these three trades so far, 1 to 2 is looking like the best one. 1 to 2 is looking like we. So from the 3 trades that we actually took, let me add myself. Yeah. So from the 3 trades that we took, so we took 2 yesterday, 1 today. 1 to 3 is actually looking like the best one. Okay. So let me do this. And then that's where price got triggered in. Copy. Paste. What time was this? 9:25 on the 4th of May. This is the 6, I think. 6 pips. 418. 12. 25%. Then okay, so if you take 0.5%, sorry, if you take, this should be, I don't think this is right. Let me see. Because if I'm taking 25% at 1 to 2, which was achieved, then this is not recorded correctly. Let me see. This must be 10 pips. Here we go. So we're taking, as mentioned, we are taking 0.25% off at 2%. So at our 1 to 2, not at 2%, at our 1 to 2 RR, that's where we take in, so when we achieve 1 to 2, you take 25% off. What does that mean? That means that you bag in about 0.5 R at that point, and then when you get here, you bag in the rest of it, basically 75%. So instead of getting 3 R, what you will then get is about, I'm not even sure what it is, but yeah, you guys know what I mean. You understand what I'm talking about in terms of like. So now what I will do is go back to the 15-minute. What you can see now is that price is starting to reject this region right here. You can see multiple wick rejections. Let's see if we can. Okay, there we go. So now what I'm doing is I'm trading counter trend, basically, right? So we're going to move this right here. Is it still within the trading time? Yes, it is. There's still an hour left of trading on this specific day. Hopefully we get a decent pullback. So we get a decent pullback before actually continuing. Okay, wait, let me see. Take that away. Go back to the 15-minute. Okay. So I can see this 15-minute wasn't the best. That one either. There's last 15-minute for this day. Okay, can we get in on the next candle? I think we can. It's 10:45. I definitely think we can. If there is a pullback to create a wick, we can then get in. Okay. Let's hope we can get in. Oh, doesn't seem like there's gonna be any pullback, guys. Yep. Okay, there's something. Let's see. Oh, but this is like 11 o'clock already. So this is outside of the trading time. But let's see what the next 15M candle looks like. Okay, it doesn't look the best. Yep, doesn't look the best. So that's our trading time done for that day. That's the 4th of May done. Let's go on to the 5th of May. So all I'm really doing is I'm testing the strategy on EU to see how it does over about 15 to 20 trades. If I can do that over about 15 to 20 trades, then jump to the next pair, do it for about 15 to 20 trades, jump to the next pair, so all 8 pairs. Then what I want to do is I want to eliminate all the pairs that are not doing the best with the strategy. So even if I have to eliminate 2 of them first and then run through that, I would like to eliminate 4 of them, then run through that process again with the last 4 and see how the strategy plays out, which pays as the best RR on a consistent basis. I don't want to catch a 1 to 2 and then catch a 1 to 3 and then catch a 1 to 4, 1 to 5. I want to see which one has maybe a 1 to 4 consistently and then take and put that one in there. So if GU, for instance, has a consistent 1 to 4, 1 to 5 risk to reward, GJ might have a 1 to 3 risk to reward, EU might have a 1 to 2, the lowest one, but then it's most consistent, or the win rate on EU is higher than everything else. Do you know what I mean? So if we do get to something like that, what we will then do is we will include EU with a lower risk to reward of about 1 to 2, but then we'll obviously have a greater win rate then. Okay, so now we're at the laptop. We're looking at the chart. We're saying, okay, what's going on here? We had this big fall. We had price taking out structure there, pushing higher. We then took out structure there, took out structures there, had this big push down. Price consolidated for a bit in between that region and that region. Price consolidated for a bit in between this region and this region. Just give me a minute. I don't know. I feel like just having the camera from behind where you can't see me doesn't make sense to me. I feel like if you can see my face while I speak, it just makes more sense. Okay, so just give me a moment. I'm gonna do that real quick. uh Let me make this screen big. Okay, we're back. So like we were saying, so like we were saying, when I get to the charts in the morning, this is what I do. I look at what happened here, and then I look at what happens here. Okay, so if this happens, you can see price spike down. Price then just moved in a bit of a range here. Once price does that, what you can then see is price moves up and then comes down with intent, with impulse. I don't know what you want to call it, but yeah, that's exactly what I see price doing. So now what I just want to see is I want to see a couple of 15-minute candles print so that I can make my decision. Are we going up from this key level here? Are we going up? Or are we going to take this key level out and then continue down? Okay, so that's what we're looking at right now. So I did move the camera, as you guys can see. I move the camera so that like I can actually be in the view of the stream, and I don't think that back camera actually works that well. So yeah, let's see exactly what the next candle does. Okay, so now you can see we clearly broke through this, right? So what I'm looking for now is simply, let me do this. I'm looking for price to pull back on the 1 minute, create a wick, and then continue down. That's what I'm looking for. Okay, let's get it, man. So let's move this here. Price continue up, create a wick. Okay, we're not going up at all. What time is this? Okay, 37. What time is this right here? Because I'm looking at the distance between this and this is quite close. Okay, I think there is a possibility of me placing this trade right here. So I'm gonna place the trade at 40. Then I'm gonna go with a 4 pip stop loss above that. I'm assuming that that's gonna be the wick, right? I know that I only have 5 minutes left. If we continue up and we take this high out, I'm deleting this stop order. We're going for 12 pips. That's what we're going for. Okay, let's see how this plays out. Okay, we tagged in. We're now assuming that this 15-minute candle will then continue down. Okay, I'm not too sure whether this 15-minute candle will continue down based on the fact that we were so close to closure. I don't know whether like at 42, I think in the last 5 minutes you don't necessarily want to be entering. So when the next 15-minute candle enters this last 5 minutes, you don't necessarily want to be entering, especially if you have a tight stop loss like this. But okay, we are in the trade now. We're gonna have to just take it into account, and boom. Let's check what happens next. Do we get TP? We definitely get 2%. I'm seeing something with EU where you can definitely get 2%. Let me see if we weren't taken out at 0.5%. Okay, I don't think we were taken out at 0.5%, guys. So yeah, you'll have a, so you only, when will you move your stop loss physically to this area is when this is hit, but you'll have a mental stop loss all the way from when you enter the market. You'll have a mental stop loss right here, right at about 60, 200, 1.260 or 20060, right? You'll have that mental stop loss right there. But what I'm seeing consistently is that you'll get a 1 to 2 winner on EU, because this is now going to be the third time in a row where I'm stopped out for 1 to 3 at break even, but then with 1 to 2 it definitely gets hit. Okay, let me just record this. And this also just shows that this disproves my theory real quick, that you can't enter within the last five, or you shouldn't enter within the last 5 minutes of the 15-minute candle. That's complete bollocks. Okay, complete bollocks. So let me bring this book closer. Let me bring the book closer. And then let me write this down. This is trade 4. It's a win for 1 to 2, break even for 1 to 3. 1 to 3. We would have gotten 25%. Break even for 1 to 4. So something that I don't mention too often, guys, is that this pen is. Let me throw it in the bin. Boom, LeBron James, mate. 25% at break even. Okay, what I don't mention too much of is that, look, you have to read a lot. To be a trader, you have to read extremely a lot, especially like books like Market Wizards and things like that. Why do you have to read those types of things? Because those are the traders that made it in life. Those are the traders that uh they accomplished 60 to 80%, 100% a year. So if you want to become successful, study the successful. That's what they always say. So let me record this. That's where I got a break even. Copy. So all I'm doing now is just recording the trade, mate. Just recording the trade. I certainly hope that as the community grows, that this specific session here, whether it be at this time or later on in the evening, I don't think I'll stop backtesting just because I think you always need to optimize your strategy. I think that. So I think I was entered in on the what's this, 42, and it's the 5th, right? The 5th of May. I think that 42 a.m. that as a trader, the minute you sleep and you just accept the fact that your strategy is your strategy, it might be performing way better on a different pair. Might not even be Forex. It might be a index or a commodity or something like that. But if you just accept that this is your strategy and this works for you, what happens if those specific pairs doesn't it's it stops being volatile? What happens then? What happens in that aspect? Do you just say, okay, no, I have to learn a completely different strategy? That's why I say I will continue like backtesting sessions Monday through Friday continuously. Continuously. That's what I think. So looking at the 4 trades that I took, I'm up 1 hour right now. Remember the first, okay, not, yeah, the first trade that I took was a loss of 0.5%. and then I won. Okay, I didn't win. The three trades hit break even, but it hit 2%. So if I had taken profit at 2%, I would have been up about 5.5%. Uh, However, just taking 25% of the trade off at 1 to 2 risk to reward, I'm looking at basically closing out zero point 0.5 odd every time. So yeah, we're gonna see if we do hit the 1 to 3 eventually. That means that the like how do I put this? The RR will then just it will shoot up completely, and that's why, like, looking at today's live trading session, with today's live trading session, if you look at that GU sell that I placed on, that I didn't take, but I was thinking of taking, even though it would have been against my rules because I'm only supposed to take 2 trades. So looking at that specific trade, the reason why we don't use set TPs, so when you have a set SL, the reason why we don't have set TPs is because if you use that as an example, that is a home run trade. You you letting it run based on the 15-minute time frame. So once you can see that price really it's moving, and you can see that this 15-minute candle just went down bearish, the next 15-minute candle went down even stronger, and then that following 15-minute candle went down even stronger, you'll end up with a 1 to 10, 1 to 5, 1 to 10, sometimes 1 to 15, depending on how far the actual thing fell. But you just need to know that you can trail your stops into profit. So once you hit maybe 1 to 10, you can trail to 1 to 7 or so on, and just take advantage of the full move. That way you minimizing your losses throughout the month, minimize the losses. When the home run does come and you get into that trade and price just continues to move, that's the one that's going to make you money, or that's the one that's going to pass the challenge or pass the verification. That's the one that's going to get you funded, and then that's the one that's going to keep you funded too. So yeah, it's important to note those type of things. Let's move on. Let me see, let's go to the 15-minute, see if there's anything else that we can find on EU for this specific day. So you can see broke, possibly get a retest and then continue down. Oh, okay. Okay, you can see there's an area in the market where price is starting to reject. Let's see how price reacts to this area right here. It's an area that we failed to break below for quite some time. So let's see how price reacts to that. You can see we're starting to reject. Okay, boom. What do I expect? This is the break and retest level, so you want to mark that. You know that you're in a downtrend, right? I would like another bearish candle or another bullish candle on the 15-minute before I'm actually doing anything. I would really like that. Yeah, let's get the next one. Boom, that's actually a brilliant entry. Wick. Okay, so now what we're gonna do now is we're gonna hope that we get a wick. We're going to, because now you can see we took out these highs, we took out this too. So now what we're gonna do is we're gonna hope that we're gonna get a wick right here on the, we're gonna get like a pullback, creating a higher low. Sometimes this terminology just runs away from me. So we're gonna hope that we get a pullback, creating a higher low, to then buy it up into this region at least. I can see that this is a key level in the market on the 1 minute. Let me just be sure. Okay, we pushed down, price broke up. Okay, no, it is a key level in the market. It's not the level that's holding price to be bearish, and that's the most important thing. Let me drop this down. Yeah, That's the most important thing. As long as we're not holding price bearish with this level here. So if we break above, we're actually continuing. So let's check. Oof. Give me another candle down. This is tight. This is really, really tight. I don't want to sit a... Okay, there we go. Now give me another bullish candle. What's the time? It's out of my trading time though. 11 o'clock I usually step away from the laptop. But let's check if we do set this. We go the 4 pip. Stop. What is this right here? Do we have enough range to get to 12? I'm even thinking of adjusting this to 5 pips. Okay, I'm deleting this now. Just because we're outside my trading time. We flirting with this low right here. It's not really something I like that much. So yeah, let me play it out. You can see that this is the next 15-minute candle coming into play now. So yes, so let's go to the next day. We called what would have been a winner. It would have been a winner. But it looks like you can catch a trade a day besides the first day, which was the third, where we caught a L and then we caught a break even in terms of the standard that we have set for the recording on the journal. So the standard is 1 to 3 break even at 1 to 1 and 25% off at 2 1 to 2. Okay, that's the standard, guys, in case you guys don't know. But on this specific pair, it's looking like 1 to 2 is the best one so far. We have at 1 to 2 we have one loss of 0.5%, and then we have 3 wins. So that would have put us up at 5.5%. The next best one would then be 1 to 3, our standardized or our standardized set of rules that we're looking at. That would be our next one. And then yeah, 1 to 4 into 1 to 5 is all looking the same. Just looking at what we have in our journal written down. Okay, so looking at what we got now, we had this huge push down. We never broke above this, right? So this is a key level in the market. This is definitely a key level in the market. This right here is a key level in the market too. Coming into London, sorry. Why are those key levels in the market? So coming into London, this lower high is the lower high that created this lower low. So this is ultimately structure, right? On the 15-minute. Looking at what it did in between, kind of just looks like a range. What we can do though is we can mark this high, saying that if we break this high with momentum, we can then possibly carry things higher. Okay, you can also see that we kind of made a double bottom right here. Why is this thing green too? Range. Okay, there we go. So made a double bottom. You can see we respected this, failed to go lower, pushing higher. So let's see what our next candle is. Okay, what I can see here is that price is starting to create a level in the market that we are respecting now. So there's a possibility for us to go lower. Okay, This will be our first area in the market where we're looking for price to just give us a bit of support or traffic or whatever you want to call it, just resistance to actually break through. So what I will say is that here is an area in the market where you can also see that price is failing to break below. So I do think, I'm not too sure if we're gonna get a wick or if we're just gonna start pushing down. But I do think if you set a sell stop right here with your stop loss, let's say 4 pips. Where's 4 pips? Okay, we can definitely get one, two, and then you're going for about 12 pips, right? I do think something like this is, you can take something like this. What are we looking at? 5.5, because I like it is just being round. What's the low on this? The low is 5.6. Okay, so we're just below that. So let's jump down to the 1 minute. Let's check exactly what has happened here. So this is the low. 5.6 is the low. Let me use this right here as the close. If we go up and then we come down, now I do think if you are gonna use this before we actually move on, I do think it's very, very possible that this right here can just break through and then continue lower. I do think so. At the same time, you want price to create a wick. Your theory would then be not to do that. What your theory would be is let price create a wick, and I want to see. So for price to create a wick, it needs to be above the blue line. Let's take this away. Okay, let's not assume. So I'm not doing that ever again. And that's not the rules of the strategy too. So you want price to create this wick to then come down. So you can either take the sell here now, which will be where price will then turn bearish again, or you can take it here. I think for safety purposes and just space for the range, I'll be taking it there, having about a 4 pip stop loss above. If this is the wick that is forming above that right there, on the 1 minute, what you can also see is that price action broke structure. We're forming a double top. So let's see how that plays out. We have enough range to get to break even. Yes, we do. This is higher time frame. We go to 1, 2, 3, which is there. Let's see if we actually get triggered in before the next 15-minute candle opens. Okay, nope. Delete. Okay, let's take these away just because I want to go to the 15-minute. So this is now kind of null and void. That is kind of null and void too. Go back to the 15M. See exactly what one. What's going on here? How we look? So you can still see price is kind of rejecting this region, and I still think there's a huge possibility of price going down, right? But for me, it's more so we need confirmation. But at this point, price is stuck in a range, and we can either go up or we can either go down, right? We're stuck in a small range that's in a big range that you just need confirmation. And boom, there we go. Boom, 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 boom. There you go. There you go. So you're gonna have that, and then you're also gonna have this. What is the theory? You want price to create a wick to then go higher. Okay, price is starting to create that wick. Let's see. Okay, I'm going to set this right here at about 80 with a 4 pip stop loss. And as long as I have, okay, perfect. As long as I have range before that blue line, I'm good. What's the time? We can roll with that. We can still roll. Can we roll? Are we still rolling? I think we're still rolling. What's the time? 55. Let's see. I think the wick has been created. Okay, boom. I'm deleting. Sorry. Jeez. Sorry about that. Place me. Let me delete this. Why am I deleting it? Because of the way price action is moving. So we weren't triggered in, guys. Unfortunately. We weren't triggered in. Unfortunately. So what you can see now, I don't know, somebody would probably say this is a key level in the market. It's just a mess to the left hand side, honestly. It's just a mess. So would you look at that? So I know that this is a key level in the market. I know that. I'm fully aware that this is a key level in the market. But I'm expecting price to continually push higher. That's what I'm expecting. After a bullish candle, I'm expecting another bullish candle. Especially if it's momentum, taking out highs. I'm expecting another bullish candle. The only way that I can enter this market is if we get that wick. So if we get a pullback on the 1 minute, need a pullback on the 1 minute, maybe to come retest this level here. And once we do that, we get a retest, I can then set my buy stop right there and then see what happens, mate. Okay, we're getting a pullback. I think 45, going with the 5 pip. 5 pip TP, 5 pip stop loss, 15 pip TP, and let's see if we get in. Now bear in mind, guys, that I'm looking at this and I'm saying, okay, we are down on the 15 minute, but the strategy says that more often than not, when you get a momentum candle to the upside or to the downside, the next candle will probably just create a wick and then continue in that direction enough to get you to break even. So as you can see, my stop loss, even if I do this on the 1 minute, let me take this off. Even if I do this on the 1 minute, what you can see is that's a break and retest. Break, retest. Let's see. I'm not too sure if that's triggered in. That is definitely triggered in. Okay, let's see. If price does not commit with momentum, remember we have a mental, we have this mental SL right here. So if price hits that, we're out. Okay, let me see. This is questionable as to whether I'll close it. I would have probably, because the SL is not physically placed here yet. Remember, I mentioned this is a mental SL. I can see all of these weak rejections. I can see that there's no. So I would have probably closed it here, honestly. I would have closed it there. So I'm not gonna act like I wouldn't have closed it. So that's a loss. Because you're waiting for the 15M to continue higher and it didn't continue higher, so that is a loss. Now I don't know if I would have closed it right on that, but I'm just gonna assume that I did. I'm honestly just gonna assume that I did. Let me see, that's the candle that triggered me in. So bro, 45. That's where it's at. Let me do this. This is the 6th of May, 9:22. 6th of May, 9:22. I kid you not, my hands are freezing right now. What? 1.20245. This is 5 pips for 50. Oh, is this positive? It should be negative. Where is this? This should be minus. Save. There we go. So can you take a look at this? With 5 trades, 2 L's, 3 break evens, we still up 0.5 R. 5 trades. Number 5. This would have been an immediate L for all of them. At this point, what is the win percentage? 2/3. Okay, so let's remove drawings. Let's go on to the next. Go on to the next, to the next, to the next, to the next, to the next. Okay. To be fair, the next candle had a wick rejection, and then the following candle was, I don't know if you guys can probably see, but the next candle was bullish after that weak rejection, and then you can see that price is kind of just slowing down now. I can see price is not just continually pushing higher. I can see this region right here is a place that struggled and price broke above. Oof, that is crazy, man. So I do see these areas in the market when price get to like when price get to trending and things like that, and you find a place in the market where prices fail to break above like for hours. So like this, we created this area, we then failed to break above multiple times. I think what you can do in this instance is place like a buy stop slightly above these wicks, let's say 90, and then place your TP in around below the bodies of those candles, and then go for like a 1 to 2, 1 to 3, because clearly this happens multiple times. I mean, the 1 to 3 would have even been possible, but this happens multiple times where price just shoots up and goes. I've noticed it. So yeah, just something to mention, I guess. I didn't take the trade, unfortunately. And I do feel like this still fits with my theme of having like one trade a day. If I was to trade 1%, I'd probably trade like one trade a day. No, I'm not even kidding about that. Okay, that's my trading time for the day. Look at that. So much momentum to the upside. That's wild. That is really, really wild. The fact that we had so much momentum to the upside, actually. Three. Okay, let me see. This should be the 7 o'clock candle. Perfect. Drop down to the 15-minute. You can see prices starting to push bearish. Just give me the 8 o'clock candle. Let me just note this right here. So we have this area that we failed to break above multiple times for quite a long time too. And then now we have these areas in the market where we are actually breaking below. Target these areas or something like that. Well, there's nothing I can do about that now, can I? Okay, that's good a pause. Boom. Boom, 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 boom. Okay. Continuation of all of this. So now what do we do? Mark the high of that candle, mark the body of that candle, and drop down to the 1 minute. Oh, that's one candle. That is crazy. That's definitely crazy. What? I don't know. This is probably news. I'm not taking anything here. That's definitely news. And I don't know exactly what's happening after this, but I think what I can do is just go back a bit like that, go to the 15-minute. This is definitely news inflicted. This is not something that I would be trading on a regular basis. So I don't want to be looking at that per se. So break retest, okay. See the next candle. Boom. Now this is normal. Or it looks normal at least. It looks really, really normal. So let's do that. That's the high of the candle. Let's get a pullback. We can take it first of all into these highs and then higher. Okay. So just give me a pullback. Ooh, that was a sharp pullback. I don't know. I'm just going with 5. I don't know even in real time if I will be able to do this in real time. But as long as I can get to 5 before we get to the top here. Triggered in. We definitely now at that area. Pushing higher. I wonder if that's break even. Remember we're going for 1 to 3. We're always going for 1 to 3. That's our standard. At least while we're backtesting, it's our standard RR. We're probably at break even now. That's probably a break even trade. Yep. Break even, mate. So let's add that. Copy this over. This is the first break even trade right across all history holds that we have. This is the very first one. Very first break even for 1 to 2. So we have 2 losses and 2 wins for 1 to 2. This is the very, very first break even. Paste. Okay, so it's break even right across everything. And then let me take these times. That's 10:01. This is the 7th most probably. We actually have a trade most days on this pay. That's crazy though. 10:01 a.m. Should have never been 776. 5 pips. 415. 0. Long. We have some water. Guys, I kid you not, I'm really trying to find out how to add background music to this thing on StreamYard. I'm really trying to find out. Hopefully I can find out before next week. And hopefully I will have my first viewer live before next week too. Let's hope so. Come on, man. I just know like time will play out. It's not even about the views, it's more about like accountability for me. But I mean like it's added motivation. You know what I mean? So yeah, man. Let's see how things play out. We got taken out and then price just continued to fly. Taken out to break even, price flew, failing to break above, price is doing that. Okay, that's my time for the day. Price usually reverse in and around this time. That's why I don't like to trade from about 11 o'clock to about half past like 1/2 +1, because sometimes price can even go into a range in between those hours or those times. So yeah, let's see, go to the next day. $1,500, 1923.03. There we go. I feel like people don't really want to do this like backtesting on their own. I feel like it's people think it's too much work to do, but it's needed though. This is literally needed if you want to become a successful trader. This is needed to kind of kickstart you to a faster learning process, because you can only take so much trades in the live market per day, whereas backtesting really depends on how fast you go through data and how fast you can actually move through it to get that data. You know what I mean? That data that each pair gives you, and the more you do of it, the better your pattern recognition, the better your chart recognition, the better like everything gets when you're spending more time on the chart. So yep, something to be aware of. So you can see there's a little range here, break out of this little range. So you can see if I do that, bit of a range, break out of this range at about 8:30. That's usually when I come to the charts. You're looking for buys based on these things, right? So you have that you do entry points. You're looking for a pullback first before price goes up. Price just continues higher, you're not doing anything. Okay, I think we can. I'm placing, because this is quite close to each other, 15. I think 15 is fine. Gold 1 to 4, or 4 pips, sorry. Where's 4 pips? Right here. And then we're going for 1 to 3. So this will be 12. 12, man. 12 pips. Come on, come on, come on. Backtesting is one of the most tedious processes that you have to do. Backtesting, man. Okay, we triggered in. Let's continue higher, guys. Let's continue higher. Okay, that's a 0.5%. Do you see why it's so important to stick with that rule? I would have probably closed it on that candle actually. Because now look at this, we're gonna get taken out at 1% anyway. Look at that. What's the point of getting taken out at 1%? Like what's the difference? The difference is you save in yourself and you get in another trade. That's the thing. Over a long period of time, you literally saving yourself. I kid you not. I kid you not, man. Over a long period of time, you are literally saving yourself. So let me copy this. And I swear this, like, doing this helps you realize why you actually do certain things in the live market. Because if you're trying to trade with momentum and when you enter there's no momentum, what's the point of staying in the trade? If somebody can answer that. Are you staying in the trade to hope that price is gonna continue your direction? No. What does numbers say? That's all you need to know. If the numbers say get out When there's no momentum, then get the fuck out, bruh. 0848. It's that simple. 1.216. 4 pips for 12 pips minus 2 pips. 100%. I think most of what it seems to me is that most of my losses on Euro USD is actually longs. I'm not too sure. I'll check the data when I'm done with like 15, 20 trades. But it seems to me that, let me see. Long, long. Okay, there's a short. But I have 3 losses. I have 3 small wins. One of them is a short. 2 of them are longs. So yeah, something to be taken into consideration. And then my one break even is also long. So this is trade number 7. Sorry if that made a bit of a noise. Trade number 7. Losses across the park. I feel like people don't want to do this because they're afraid that it's kind of going to expose them as a trader. But it's not exposing you as a trader. It's just exposing the way you look at the market for that specific strategy. That's it. That's all it is. It's helping you because you know, like I know now that if I traded on EU with a 1 to 2, at this moment I would have been up, let's say, that's 6 minus 1 is 5. I would have been up 4.5%. But if I just went with the standardized 3 1 to 3, uh, taking 25% at 2 or I think I would have been break even now. Do you see? So like it has nothing to do with the specific trader practice, and has all everything to do with the strategy. So always look at what you trade in, why you trade in it, why you're doing it specifically, and stop worrying about what anybody else thinks. That's why I jumped onto YouTube, to just be able to express as a trader, like, sorry, but to be able to express as a trader what I think from my personal perspective. What I think from my personal perspective, let me put that out. What actually needs to, like, what you need to go through, and then also be able to journal like this whole process, because nobody's sitting on YouTube backtesting. Nobody's sitting on YouTube backtesting the strategy and then trading the strategy at the same time. Nobody's do. I haven't seen anybody do that. So hence me actually jumping on YouTube and doing this, so you guys can then see the the vigorous work that has to go in. Because I'm sitting here for an hour or two, but it doesn't mean that that's the only backtesting I'm doing. Yes, the live trading, that's the only live trading that I'm doing, because I'm only trading in London. But be sure about it, when I end this live stream after 2 hours of backtesting, I'm gonna go and I'm gonna do another 2 hours. I'm probably gonna get some chow, just eat something, and then go on backtest again for extra 2 to 3 hours, and then read a book, and then go sleep, and then wake up and do the exact same thing, because that's my job. I'm a trader. I need to know exactly what's going on in the markets. I need to know what's happening. That's my job, to know what's going on within my currency pairs that I trade. It's my job to know what my strategy does on certain currency pairs. And if I don't, then that means I'm ignorant in that job. And how can I employ myself when I know that I'm ignorant? Think about that. Would you employ anybody else? Let's say if you have a car workshop or something like that, because you really need somebody that's within cars, that knows that specific brand of cars, and you fix in, let's say, Lamborghinis, because it's very niche. Like it's a niche market. You fixing Lamborghinis. You're not going to employ somebody that worked at Mercedes to just come and fix a Lambo. You're not going to do that. Like, why on earth would you do that? Why on earth would you employ somebody that worked at Mercedes or to come and work and fix Lamborghinis? Like, explain that to me. Why would you do that? You go to Lamborghini, ask if there's any mechanics there who, who would want to work for you. You offer them a good salary. You know that they are competent. They're reliable based on the previous data. They're competent, but you're not just gonna go get somebody that has no reliability in that field, no reliability, no competency. They lazy too. They're not gonna do anything. So what's the point of employing them? So then, like, if you take that and you put that into Forex, you the sole trader of your money. You the sole trader of everything. So why would you as a business, let's call the business Marcelino Cameron. So why would Marcelino Cameron employ Marcelino Cam or Marcelino? Why would Marcelino Cameron as a business, Marcelino Cameron Ltd, employ Marcelino as an employee if Marcelino isn't even showing any competencies, any reliability, anything within the field of Forex? Why on earth would my business want to employ me just because it's my business? No, that's not the way it works. You need to show yourself, study to show yourself approved. So you need to work so that you can be employed by yourself. And I feel like confidence is one of the stuff that in trading is one of the most important thing. Confidence and competency is one of these, or two of the most important things that you need in trading. And if you can't prove to yourself that you can do it, you're just going to be wasting your money and running around in circles, running around in circles, running around in circles. However, if you're back testing, forward testing, continuously journaling what you're doing, what will then happen is that you will have numbers in front of you to convince yourself what you can see in the market. You can then convince yourself, okay, no, because of this, I can take that lot size. I can take that risk percentage based on the numbers that I have in front of me. I know that I have a 50% win rate on Euro USD if I take a 1 to 2 risk to reward. And therefore, since I have a 50% win rate, I can maybe up my lot size to 1% and then go for 1 to 2 and only take 2% out of the market. Do you know what I mean? So maybe you get to GU and you see, okay, 30% of the time I'm winning, but when I'm winning 1 to 4 or consistently for 30% of the time. So let me drop my risk down to 0.25 so that I can, when I'm trading GBP USD, I can now account for all of the trades that I'm going to take. I'm going to take every single day. I'm going to take a trade, and I can account for all of them. And each 1 to 4 that I'm going to be taking, it's going to play out numbers wise. Do you know what I mean? Like, people don't think these type of things through. People don't sit down and all they just want to do is plot lines on the chart, plot areas, and say, this is my point of interest. Let me take a 1% trade. Let me take a 10% trade. Let me take let me take 100% trade, and let me just double this money. You know what I mean? Like, and nobody's teaching that. Nobody's really teaching that. But what do I know, man? I'm just an up and coming trader trying to get consistent, trying to get funded. So yeah, let's move on. Let's move on. Let's see if there's any more trades on this specific day. So you can see that a wick was created. But yeah, a wick was created. And then that happened. Cheapers. Okay, so we took this out. This is worth noting. We took that completely out. It's definitely worth noting. So let me do this. And then let me do that. Hopefully we get a wick, possibly into this area. Get a wick. and then we continue down. Okay, this is big momentum. This is big momentum. Let's go down to the 1 minute. Let's move up. Let's move up again. Okay, what I'm doing now is I'm plotting this 4 pips. Okay, no, let's go 5 for safety purposes. It's London open. We might. Okay, no, this thing needs to go to 50. 50 like that. Drops that to 50. There we go. Something like that. What's this? 455. I think we can actually go move it up to 455. Let's move it up to 455. And we go in for 1, 2, 3. Let's see if this thing gets triggered. Okay, nope, it doesn't. So wait, now we remove that. Let's wait, we're calculating our new lot size now. Okay, as I mentioned, this might happen. Let's see what the next candle is. Is it bearish? Okay, is it bearish? Nope. That is bearish though. Let me see, what was this? So this is what you can do now is you can place a trade right there. Go with about 5 pips. I'm going with 75 pips. Something like that. Let's see. See how this plays out. Let's see how this plays out. Okay, there's enough time. There is enough time. Okay, we in there. We in the bitch. Okay, I think we might have been taken out. Let me see. I think we might have been taken out. Or not taken out per se, but we might have closed this trade. I think I might have closed this trade there. Let me see. Would you have closed this trade there? Based on this right here, I think I'm keeping an eye on price moving through there. And that's the shitty part. Like, now price is moving down. You're at half now. You're at break even. Beautiful trade, mate. Break even. 1 to 2, 25%. This is the problem. How do you account for this? That's not my thing. How on earth do we account for this, guys? Oh, you guys can't see this thing. Huskies. Sorry. So this is my problem now. We have our entry right here. We get triggered in. We move down, we move down, we move down. We have our mental stop right here. Remember, I said we only move the stop to there when we hit this, right? This right here is showing me something. The blue candle that pulls us back is definitely showing me something. So this blue candle is it's making me question where the price is gonna go up or go down in the live market. Definitely. This right here though, this tap, you might have seen me in MetaTrader 4 just clicking that thing closed real quick. There's a big possibility where I might have closed that thing. I'm not even joking. There's a huge possibility where I might have closed this trade. right here. Now I can see that we didn't necessarily break through. If I'm really trying to be objective in the point where if this happened in the live markets, how would I treat it? Because I can see this is break even. I can see that I would have gotten a 25%. But would I close it out here? That's my thing. Do I close it out here? Don't I close it out? What exactly would I like? How would I have felt in that moment when sitting with this trade and saying, okay, no, it looks like it's gonna go down. However, this 15-minute candle, we're just about to close. We're closing damn near a doji. We don't know whether it's gonna go up or go down. With Euro USD being in a 15-minute range before we break up, we then break down. There's a possibility that we could break in. I think I'm closing it here. Personally, I think I'm closing it there. Now, after that, you can feel sorry for yourself. You can say blah 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 blah. I don't even think I'd close the season even off because we tapped that thing and then we moved. Like, that's the crazy part about it. Like, bro, and you're looking at the fact that you're taking it on the same day that you took a loss earlier. So that's the problem. Now you're looking at taking two losses on one pair, 925, within the space of like an hour. This is the 10th. Within the space of an hour, you took two losses on one pair, which is not the way I necessarily trade. I kind of, looking at what I did this morning, I kind of ran away from pairs where I even get a break even. So this is 5 pips stop loss, 50 pip TP. Short, continue. Can't fathom that I'm putting this as a minus. But anyway, it is what it is, man. It is what it is. That's trade number 8. I wish I was this super trader that just won like 70% of the time, 80% of the time, and getting 1 to 3s and shit like that. But no, I ain't. I'm just a regular trader, man. I know that across different pairs I have different win rate. So I'm just, as I mentioned, I'm just filtering out. Filter those things out. There's no trade there. Might be a trade here, but what's the time? Okay, so there might be a trade here. If we can get a pullback, there might be a trade. No pullback. And of course, price is moving. So pointless. Delete. Delete. Delete both these lines. Let's see. Now we're probably gonna move up. Yep. Yep. That's out of my trading time. I want to take at least another trade on the live. So that means I've taken I don't even know how much trades I've taken on this live. But it's fine. It's fine, mate. It's fine. It's fine. It's fine. Let's see. Let's see. Let's see. What time is this? 11 o'clock. That's 3 o'clock in the morning. That's 6 o'clock in the morning. 7 o'clock. Okay. What do you see? See an area in the market where price is failing to break. This is not the time that you are looking at the market. Would have been a brilliant trade though. Brilliant trade. I think we would have hit stop TP somewhere here based on like this weak rejection. We didn't TP somewhere here. Okay. I went way too far, but okay. 8 o'clock. Go to boss. You can see a level in the markets being created here. I think we go with a 5 pip stop for safety purposes. And then let's see. 5. Oh, that's a tough one. You're asking a lot out of the market. See, because this is the 15-minute candle wicks, and you're asking so much out of the market just to clear those candle wicks. Do you take this trade? I don't think I take this trade. I think there's a huge possibility that price can. Okay, price did that, but I don't know if we would have gotten break even. And look at that. Now you have area in the market where price is respecting, and then you have this happening, right? And this is all from London Open. You have these regions in the market. You have the market that you're really just thinking about. Okay, can we times? So what I'm looking at, I'm thinking, okay, is it a possibility that we're going to continue higher? Is there a possibility that we're going to continue higher? Let's create that wick first. Okay, that's hardly a wick, mate. Let's go down, create that wick. That's still hardly a wick. Like if I enter, let's say I enter on the high of that candle. I'm gonna have a 5 pip stop below these wicks. Am I even gonna have enough? Remember, here's this right here. It's crazy. So now it's up to you. Is this key level bounce enough? Is it enough? I think it is. Break, retest. I think it is enough. Based on these right here. These levels. If we continue higher, we should then continue higher. At least to get a break even. That's what I think. At least to get a break even. I don't know if we're gonna move up all that much. But I think at least to get a break even, we're gonna move up 5 pips. Let's see. What's the time? 36. Boom. We're still holding this level. Triggered in. That's a beautiful candle. I know I'm physically at off now. I don't think that's break even. Like, let me see. I don't think it's break even. 5. 355. Okay, stop loss is right here, but we looking like we're failing to break above there. What's going to happen? Is that a stop loss? That is definitely a stop loss. So we got another stop loss. Let's copy. See, the one thing that has changed a lot about me over the last 5 months in terms of trading is that I don't take backtesting personal anymore. I don't take any losses personal because I think it's just now, even after saying it for so long, I actually understand, like, now it's just a numbers game in terms of that's your system's numbers, it's not your numbers. So I took it personal in the fact where I thought that the numbers that the trading is reflecting is my numbers personally. It could be your numbers in the fact where if you are not following your rules, if you say you trade in one trade a day and you're taking three trades a day, that shit's your numbers. That shit is your numbers, dog. That shit is yours. But in the sense of backtesting, like, you testing the system to see if it's gonna work for that specific pair. You shouldn't feel like, oh, it's not working, oh this, oh that. If it doesn't work, you say, oh well, it doesn't work, it means it's saving me money, and I know it doesn't work, so let me cut it out. Do you know what I mean? So yeah, that's how I look at backtesting now. I look at it more in the sense that it's here to save me. It's not there to, or at least to give me a outlook as to what exactly is, like, what exactly can happen. Do you know what I mean? So yeah, that's trade number 9. Trade number 9. Okay, I just took 3 losses in a row. And I think it's because 7 and 8 was on the same day. I'm not too sure. But that's usually where, if I take three losses in a row, I usually call it a day, especially with with backtesting. Not call it a day, but call it a session. So what I will do now is I'll take 30 minutes to an hour away from the charts, and then I'll come back and I'll hit another backtesting session because I caught three losses in a row. So that's what I'm about to do. Uh yeah, guys, I do hope that this was helpful. I do hope that whoever watches back uh like sees how I actually backtest and can find a bit of like just a bit of confidence in the fact that you're not backtesting to see how you trade, you're backtesting to see how you can trade the system or the system trades itself. Do you know what I mean? So once you have the concept, let's say the concept is confluence with trend lines, fibs, let's say trend lines, fibs, structure. What else is there that you can add? Divergence on not I don't know about MACD, but RSI. Divergence on the RSI, and then moving average crossover. So you have those 5. You're saying you're taking those 5 all together at one specific point on a time frame that you're testing. So let's say you're testing 1H because you want to be an intraday trader. You're testing those things on a Euro USD. You're going through 1, 2, 3 trades. You see, okay, no, you won 3 in a row. You feel hyped. You feel positive about yourself. The next 3, you get a break even. You get a loss. You get a loss. And then the next 7 is not the best, or the next, so you're at 6, the next 4 is not looking the best. So now you're looking at your previous 10 trades and you're saying, damn, like, it doesn't seem like I'm the best trader. but it's not you. You just testing a system. That's all. You testing theory that what was taught to you. That sometimes it takes a while for your brain to acclimatize to it. Sometimes it takes a while for you to actually see it. So give it time. Give it time, and then it might also be that that specific pair doesn't necessarily work with all of those confluences. So after 20 trades, see what happened, see why you're losing. Is there a commonality between all of the losses? Uh, is it something that you can remove? If it's not something you can remove, then say, okay, maybe I go on to a different pair. Let me back this for 20 trades. Let me see if the exact same thing happens. If the exact same thing happens, then let me remove it. Do you know what I mean? And that's the way you formulate the strategy, and that's the way you start gauging whether your strategy is working on certain pairs, whether it actually works. Most strategies actually work. I think it just comes down to like how much it works, like what the win rate is. Are you comfortable with that win rate? Like if I get a win rate for the strategy of 30% or of 40%, am I comfortable with that win rate for certain pairs? If you're comfortable, then you're gonna say, okay, I'm comfortable with the win rate, I'm comfortable with the risk to reward. And what I'm gonna do now is I'm either gonna adjust my risk to reward to the one that wins the most to get my win rate up, or I'm gonna say, okay, I'm comfortable with this risk to reward, I'm comfortable with this win rate. Let me now adjust my actual risk so that I can last throughout the month of trading. So that every day I can have a trade. Every day I can have two trades. Let me do that instead of just uh going ahead and following like a random person on YouTube saying you must take 1% and then take 3% the next day, or take 1% and you won 5% now. So now let's risk 4% because you're not gonna go over the max daily throwdown on FTMO. You don't even know what your win rate is. You don't even know on that specific pair that you found a setup on. You don't know like what your win rate is for that. Number one, you don't know what your perfect risk reward is for that. Number two, you don't know what how you perform on that specific pair. Number three, and now you're going in with 4% and you're just going to lose all of your profit. Doesn't make sense. That's why everything needs to be accustomed to you as a person, and when you can do that, that's when everything starts to flow and feels like everything starts to come right. And that's where I am as a trader. I feel like everything is starting to roll for me as a trader because I'm understanding that it actually revolves around me as a person. How I feel on the day. Do you feel good when I wake up? I ask myself certain questions. Do you feel are you still tired? Is the If you are still tired, do you think it's going to affect your trading? If it's going to affect your trading, then stop trading. uh have you had arguments with certain people? Is that certain people close to you? No, I haven't. So are you emotionally good to trade? Yes, I am. Like it's important to ask yourself these questions in the morning. It's important to remind yourself that the market is every moment in the market is random, even though the market prints similar patterns over and over and over and over again. Every moment in the market is random. Just remember that. So yeah, shout out for the session, guys. I'm about to call it a day. I just need to get some fresh air after this three losses on backtesting. I need to get some fresh air and then come back after maybe an hour or so, and then hit the charts again and see if I can finish up these 20 trades on EU today. Okay, have a brilliant evening, guys. Have a, I don't know, to those who's in New York, have a brilliant day further. I know it's probably still late morning, early afternoon, something like that. So yeah, shout out, guys. Peace out for now. Enjoy the charts. Work hard. Put the work in. Understand yourself. Know what you're doing. And it's your boy Marcelino. Cheap is this thing's taking hella long to end.